Welcome everyone. This is a short order block lecture. Very quick, very straightforward, very direct. First off, I'd like to excuse my voice, so please excuse my voice. I am feeling sick, woke up with a high fever and a cough. Don't worry about it, the schedule will continue as per usual. Chapter 8 of the Mastermind will be released tomorrow, as well as the 9 a.m. CR lecture that everybody must watch in order to benefit from the live trading sessions. Anyways, let's get right into this video. I do not want to waste your time. So first off, an order block. It is a PD array. On the higher time frames, you can consider order blocks as a key level. Now, the one problem that some students of mine were having was actually locating an order block, deciphering what candle in the low or high is the order block, or even throughout the move, right? So the usual definition of an order block would be this, right? So there's two definitions, right? One being, we can put order block equals candle that takes out liquidity, right? So we'll just keep that as lick. Candle that takes out liquidity. What is the second way an order block can form? Right? There's another way that an order block can form, specifically in a trend. The answer right here would be creating new liquidity, right? So this would be a reversal. Let's remove the background here and the border. This is the reversal and this is the trend. Sorry about that. And this is the trend. So, two different types of order blocks, both of which are very valid. How are you going to locate a bullish order block on a reversal? That means the candle must take out liquidity. Is this an order block? Well, first off, we need to see if there's any type of liquidity that is being taken. Absolutely. Right here, we are breaking through lows. Right, we tapped right below this low right here. So let's just move these things over. As you can see, the low was tapped. And therefore, that means we have created an order block. Thick, down close candle tapping into liquidity, taking out liquidity, right? Candle that takes out liquidity. This is the reversal. Now, the trend. How do you locate the order blocks that create new liquidity? Firstly, you must locate other PD arrays. So a close above this specific candle, a candlestick close above this specific candle validates the order block. Entry right here, long, targeting the opposing end of the range. Now, how can we locate order blocks within a trend? So within this move right here, where are the order blocks? Right? Is this an order block? No. Is this an order block? Yes. Is this an order block? Yes. Is this an order block? Yes. Now, the question is, why are these order blocks? Well, remember, the trend order block must create new liquidity. How do you create new liquidity? Or better way to put it, how do you spot a new liquidity creation? The answer would be forming a new PD array or tapping into an old PD array. Right here you can see a fair value gap was indeed tapped into with this thick down close candle. Right? We are filling liquidity, generating new liquidity with the push up. A close above is the confirmation. Where does the close above happen? Just around this candle right here. You would have an entry right along here. Now, why is this an order block as well? Because we tapped into an old order block, created new liquidity within that order block, in this order block right here. A close above this high in specific confirms and validates the order block. You are always looking for a close, right? We have a candlestick close above. The next candle never tapped into it. However, the candlestick right after did tap into it. Expansion upwards. Now you see this all across your charts. Tapping into a fair value gap order block confirmed with a close above, tapping into that order block, expanding upwards. Very simple, very straightforward. Now let's actually go locate a CRT. So let's locate any random 4-hour CRT. Let's just choose this one as it sticks out to me. We have a 4-hour high, a 4-hour low, 6 a.m. high, 6 a.m. low. This is actually perfect, as this is one of my favorite 4-hour CRTs on the futures markets. Excuse me. Let's rewind the time here and drop down time frames to the 15-minute. Right, 4-hour, we need that 15-minute to locate the lower time frame CRT, and then we can locate a lower time frame order block. Of course, you can find an order block on the 15-minute time frame. So from a 4-hour, you can of course enter from the 15-minute. I like to get some entries on the lower time frame. Be a little bit more precise, right? Anyways, tapping into liquidity. What is liquidity? These highs. Now you can also say there's a key level. What is the key level? This in specific is a daily high. How do I know this? First off, I saw this trade happen live. And secondly, you can see right here, we got Wednesday's open, which would be 18 o'clock on Tuesday, which is right around here. And Wednesday's close, which is 18 o'clock on Wednesday, right around here. We have Wednesday's low and Wednesday's high. Correct? What does this mean? We have a daily key level above a 4-hour CRT. Okay? This is a 4-hour CRT. Let's write it so you guys are not confused. 4-hour, 6 a.m. CRT. I was not expecting to go into key levels here, but why not? All right, so 4-hour CRT. We have the daily high as our key level. We can erase this. Daily high being hit. Of course, on the 15-minute time frame. Thick up close candle. So a bearish order block is a thick up close candle. A bullish order block is a thick down close candle. All right. So we have the order block formation with a close below. So this is the validation point of the order block. As soon as this candle closed below the thick up close candle, that took out liquidity and hit the key level. If you want high probability setups, your order blocks will almost always be touching a key level. All right, so we took out liquidity. This means that this is a reversal order block. 15-minute order block. Close below right here. Confirmation, validation, entry short at the tap. targeting the opposing end of the range. How would you actually play this short? First off, you would enter at the order block low, and you would be targeting the opposing end of the range. This is a 1.61 R to R trade. This is actually why I do not execute 15-minute order blocks. Now you can drag your stop loss lower to the order block open, right? This would be a 2.56 R to R trade. However, I like to drop down time frames to the 5-minute. First off, on the 15-minute, forgot to show you, we have the lower time frame CRT here. So we have the high and the low. On the 5-minute time frame, you can clearly see we have a 5-minute order block. Sadly, this is a terrible example to be showing you guys, as it was never in fact tapped into. Regardless, I'll draw it out. What is the 5-minute order block? Notice, tapping into a key level. This line is the key level. This thick up close candle that closed inside of the key level above liquidity, taking out liquidity. Okay? Notice how I emphasize on those parts. Anyways, order block only confirmed with a close below. Close below, order block confirmed. You can enter as soon as you get a close below, or you need to wait for a tap of this order block. Never tapped into. Breaker block tapped into over here. Short. What is the breaker? You go from the close of the breaker to the opposing end of the breaker for a near zero drawdown entry short. Now, can we drop down time frames further and locate a 1-minute order block? Of course you can. We have a 5-minute CRT here. I'm sure some of you guys have noticed. Let's just go on the 1-minute for fun, or sorry, the 2-minute. If this chart can load up here. We're having some technical difficulties. I apologize. Alright, same exact setup here. These thin lines are the 4-hour CRT highs. This is the key level. This is the 15-minute CRT. And what is the order block? Very, very visible. Let's turn these lines blue, just so you know that the 15-minute CRT is colored in blue. And for some reason, I'm having more lag than usual, which is weird, but we will need to deal with it. All right. So let me just show you guys 4-hour CRT high here, 4-hour CRT low, 15-minute order block, and a key level right here. Okay. On the 2-minute time frame, we have price tapping into liquidity. Where is liquidity? Right here. 15-minute CRT. Specifically 10 a.m. to 11:30. We have this purge, 10:24. Thick up close candle tapping into liquidity. What is the liquidity? First off, above the 4-hour CRT highs. Secondly, above the lower time frame CRT, which is the 15-minute CRT. And thirdly, tapping that key level. All of those factors validate this order block only once we get a close below. Where is the close below? Right here. Candlestick close below. Order block confirmed. Entry short. Now you just lowered your R to R immensely. Or raised it, actually. So let's just place it. Stop loss at the swing high. And of course your take profit at the lows of the 4-hour CRT. That is a 282 point move on NQ and a 6.75 R to R trade. All right, guys, that's going to be it. I think I explained more than enough. A reversal order block is a thick up close candle or a thick down close candle, purging liquidity, tapping into liquidity. Close below or above validates the order block. All right, a trending order block, very, very straightforward, very simple. Forming new liquidity. How did we form new liquidity? We formed a fair value gap. That is new liquidity. So I didn't mention this before. Good thing I'm mentioning it right now. The other examples before that you saw in a trend were all tapping into liquidity, right? Testing the old fair value gap. However, an order block can also be formed when it creates a fair value gap, as it is creating a new liquidity. All right, I hope this simplifies everything. If you have more questions, please feel free to ask away. I'm active in my Discord. Not much I can do on my sick days. Anyways, hope you guys are doing good, and I'll catch you guys tomorrow. Bye-bye.